Hi, in this video I'll be talking about different types of investments. This slide shows the different types of investments that I'll be talking about in this video. These include stocks, bonds, mutual funds, exchange-traded funds, also known as ETFs, real estate, commodities, cryptocurrency, certificates of deposits, also known as CDs, options, as well as savings accounts and money market accounts. Let's start off by talking about stocks. Stocks represent ownership in a company. When you buy a stock, you own part of a company and you may benefit from any profits and growth that the company has. Stocks offer high potential returns, but they do come with significant risk as value may fluctuate widely based on the company's performance and current market conditions. Stocks are best for investors who are comfortable with risk and are looking for growth. Next are bonds. Bonds are loans to a government or corporation where you earn interest payments over a fixed term and receive your principal back at maturity. Generally, bonds are less risky than stocks, especially government bonds, and they offer steady returns, but usually these returns are lower than stocks. Corporate bonds may offer higher returns with a bit more risk compared to government bonds. Bonds are best for conservative investors who are seeking regular income and lower risk investments. Next, mutual funds. Mutual funds are pooled investments managed by a professional who buys a diversified portfolio of stocks, bonds, or other securities. Mutual funds offer diversification, which can reduce risk, but because there is a professional involved, they usually involve fees. Mutual funds are best for beginners and those who prefer professional management and diversification of their portfolio. Exchange-traded funds, or ETFs, are next. ETFs are similar to mutual funds, but trade on exchanges like stocks, which provide flexibility in buying and selling. Risk profile can vary from ETF to ETF, ranging from low-risk bond ETFs to high-risk sector-specific ETFs. Generally, ETFs have lower fees than mutual funds. ETFs are best for those seeking diversification with lower fees as well as flexibility to trade throughout the day. Next, let's talk about real estate. Real estate involves buying property, whether that's residential, commercial, or rental, or investing in real estate investment trusts. Property can provide rental income as well as appreciation over time, but they do require significant capital and may be impacted by market downturns. Real estate is best for investors looking for diversification and income, often seen as a long-term investment. Next, commodities. Commodities are raw materials such as gold, silver, oil, or agricultural products. These materials can be bought directly or they can be purchased through ETFs, futures, or commodity-focused mutual funds. Commodities can be volatile as prices depend on supply and demand, and precious metals are often seen as a hedge against inflation. Commodities are best for those who are looking to diversify, especially during times of economic uncertainty. Next, cryptocurrency. Cryptocurrencies are digital currencies like Bitcoin and Ethereum that are decentralized assets that are traded on online platforms. Cryptocurrency generally is high risk and can be highly volatile with potential for both significant gains as well as losses. Cryptocurrency is best for high-risk tolerant investors who understand the technology and volatility of digital assets. Next, certificates of deposits, also known as CDs. CDs are savings accounts with fixed interest rate and return. You deposit money for a specific period and receive your money back with interest. CDs are low risk and are FDIC insured, but returns are generally lower than in other types of investments, and additionally, you may pay a penalty for withdrawing early prior to maturity. CDs are best for very conservative investors who are seeking guaranteed returns. Next, options. Options are contracts that give you the right to buy or sell an asset at a set price by a certain date, often used for hedging or speculative purposes. Options are complex and can be very high risk with potential for significant gains or losses. Options are best for experienced investors who understand market movements and risk. Last but not least, let's talk about savings accounts and money market accounts. Traditional or high-yield savings accounts and money market accounts earn interest and offer high liquidity. They are generally low risk with modern returns, and high-yield savings accounts generally offer slightly higher returns than a standard savings account. These types of accounts are best for emergency funds or short-term savings with quick access to funds. So, which of these types of investments is right for me? Well, each investment type has its pros and cons and can fit differently into various financial goals as well as risk tolerance levels. Generally, a diversified portfolio includes a mix of these investment types in order to balance growth, income, and safety over time. Thank you for joining me in this video today. Appreciate your participation.